Are you in the process of buying or selling a home and you want to get some clarity around the closing costs that you're going to be expected to pay? Maybe you've been given a few estimates from some different lenders and you just don't understand why the numbers aren't lining up or matching. Closing costs are confusing and they're quoted in so many different ways, which is why in this video, we're going to spend the time that you need walking through and understanding what you'll be paying for who pays them, and how much they should be. Hi everyone, I'm Megan, and if you're new here, we like to talk about real estate, mortgages, and finance, and everything you need to know about personal finance and credit when you're trying to purchase a new piece of real estate. There are three primary reasons that closing costs can appear very different when you're looking at estimates you receive from banks and lenders and mortgage brokers. And one of the main reasons for that is where you're buying and selling. If you're buying in the state of PA versus the state of Florida, Western PA, where I live, versus eastern sides of the state have their own taxes and rules. So the type of financing and loan type you decide to get also can affect it. Conventional loans, government loans, investment properties, second homes, the value of the home you're purchasing. There's so many reasons why. Although that there are many reasons why closing costs can be different amounts, one thing remains the same, and that is that the estimate that you end up getting before closing and even in the beginning should all look the same. Home buyers today in 2022 and going into 2023 all receive what's called a loan estimate and a closing disclosure, and the same sections are on these forms that you're going to get, and the same closing cost bundles are going to be on there. So let's walk through the different groupings of closing costs so you understand what they are. So the first section is the lender's closing costs. And in the lender's closing cost section, you're going to find things like an underwriting fee and a processing fee. This is where you're going to see an origination charge on there. An origination fee, many times the lender fees won't always be broken up that much, but they'll all get lumped together. And this lender closing cost is where whatever you're getting charged by that lender should all be in there. The next category is what's called third-party fees. These are things like appraisals, the credit report, and a normal credit report, $25 to $60, but some lenders will bump that amount up just to leave a little bit of wiggle room. There's your verification of employments. There's realtor fees if your real estate agent charges a $250 to $500 fee. And that wraps up the third parties that are common. The next section is your legal fees. Now your legal fees these costs have to do with the attorney or title company that's going to be doing your due diligence on your behalf. They're going to be getting your title insurance. They also have things like closing protection letters. It's a lot of times abbreviated and called a CPL. They will have wiring fees in there. A closing or settlement fee will also be included if one is being charged. And depending on the state you're in, sometimes the seller pays this, sometimes the buyer pays this, sometimes it's split. And then that leads me into the next section, which is your city and state fees. This is like a recording fee at your local courthouse. If your state charges transfer taxes, this is a tax that you can get imposed by your state, and in Pennsylvania charges 2%. So if you buy a house for $200,000, 2%, 1% the buyer pays, 1% the seller pays. And so each state and each municipality will be a little bit different. The next section is what's called your prepaids. And these are the expenses that you'll be paying every year when you own a home. Things like taxes, insurance, interest on your mortgage. And when you start a new loan, you have to prepay a certain amount up front. Let's use insurance, for example. So insurance, you're going to go to your insurance agent, tell them you're buying a new home, and they're going to quote you an insurance policy. Let's say it's $1,000 or $1,200. If it's $1,200, you're going to pay $1,200 when you buy the house, and then you're going to pay it each month in your payment if it's $100 a month, or quarterly if you don't make it part of your payment. The prepaid is you're prepaying insurance one whole year ahead. Then you've got your interest. So whenever you close on a mortgage, you pay interest from the day you close till the end of the month. And then it covers that next month's mortgage payment, because you always skip a month before you start your first mortgage payment. Tax prorations are another prepaid, depending again on your state and where you live. Some taxes are paid ahead of time as a prepaid, and some are paid in arrears. And then the last section is your escrow account. So if you have a mortgage payment and you have taxes and insurance included in the payment, the bank wants to make sure there's a cushion. And so they almost always are going to put anywhere from 2 to 3 extra months of taxes and insurance. They're going to collect that at closing to make sure there's enough in the account for a cushion. And if they know that you're closing, let's say June, and they know taxes are due in December, they're going to collect enough in that escrow account to pay the taxes in full in December if you only have 3 or 4 payments left. Now, I want to mention that as a mortgage specialist that looks at many quotes that clients are given, that this area is a sneaky section that I see some lenders leaving things off their estimates. And the reason they would do this is if you are not escrowing taxes and insurance, but usually you need 20% down to do this, you're not going to have any escrows. But what you are going to have to do is you're going to have to pay the seller back from taxes they've already paid. So even though the lender isn't charging it to put it in an escrow account, it still needs to be paid. So our motto here has always been full transparency, so to help you figure out the exact dollar figure or as close as we can get to it so that there's no surprises at closing. The numbers can be different from 3 lenders, even if they are for the same house, because outside of the 3 lender fees from that first section, all the other fees are charged to you by other people. They are third-party fees, and we're trying to give you an estimate of what you will be charged. But keep in mind that if you have 2 estimates in front of you, and let's say loan officer number 1 uses $1,000 for your homeowner's insurance, and loan officer number 2 uses $600 for your homeowner's insurance, it isn't going to matter what each loan officer put. The insurance you pick is going to be the cost that you choose when you contact your insurance agent. And the same applies for the title company or attorney you pick. One lender will never be that much more or that much less than another because their costs and the ones you need to compare are really just that first section, the origination charges and the appraisal and what the lender fees are. Then after the lender fees, the rest of the costs really should be the same no matter what loan officer you work with. The more important thing is that you work with someone who's honest and educates you on what the costs will be. You don't want surprises on the closing day or to be told you need $2,000 more the day before because somebody left something out or underquoted. You might be wondering why I didn't mention home inspections or well, pest, radon, home warranties. And this is because these costs are optional and something you pay for outside of financing of the loan that you are choosing to get. Therefore, these costs do not go on the estimate because it would make it more difficult getting your loan to approve these fees. Now, who pays for closing costs? Some of the ones we just walked through. This is going to vary dramatically depending on the state that you're buying in and how much you need personally. But buyers, if you're buying in states like New York or PA, the closing costs are going to be higher than in states like Florida or Colorado. And so who can you have help pay these costs and how do you get this done? So how you can get closing costs paid for by someone other than you is through what's called seller's assistance, where you ask the seller when you make an offer to cover a certain amount of your closing costs. Each loan program is a little different with how much you can ask for. Another option is by getting lender credits. Lender credits are fees that you can get from the lender to cover some of those closing costs. And then the last one is there are some government programs, down payment programs that also can help with closing costs and down payments. Now, when do you pay closing costs? Typically, most home buyers, I would say 95% of home buyers pay closing costs at closing. Fees that typically are paid ahead of time are an appraisal, could be paid ahead of time. Homeowners insurance might be paid ahead of time, but anything you pay ahead of time should be deducted from the initial figure that you were given. Let's talk about the big elephant in the room. Are these costs negotiable? Is there a way to get a break, a deal on closing costs? Can you roll them into the loan? I get that question quite a bit. You know you've heard your friends or neighbors talk about doing this, and you want the same discount code too, right? First, know that the closing costs we are talking about need to be paid by someone. I always ask people when they've said, oh, somebody else isn't charging me this. I said, do you think that you can call the state of Pennsylvania and get them to lower that 2% tax for you? Probably not. Are you not going to have an attorney? Can you get your property taxes waived? No. So it's just getting familiar with all these things and understanding that you have to think of this in terms of what are the things you can control and change yourself and what can't you control. So here are the 3 ways that I've seen closing costs reduced for you if you're a home buyer. First one is seller's assistance. And this is where when you make an offer on the home, you ask the seller to pay for a portion of your closing costs. During my 18 years helping home buyers and sellers, I would say 16 of them has seen seller's assist used on at least 30 to 40% of sales contracts. It's very common. Now, unfortunately, in the most recent years in the market, asking for seller's assistance when there's 10 other offers, it makes it getting it a little bit more difficult. So until the market cools a little bit, you will want to talk to your real estate agent about doing this. There are some closing costs that can be rolled into the loan. Now, this happens with a lot of government loans where there's an upfront mortgage insurance premium fee that gets put into your loan amount. Lenders also can give what's called lender credits, and it's a tool that we have used for years. And instead of asking the seller to help, you're choosing to take a slightly higher interest rate in turn for getting money back at closing from the bank to pay for some of the costs. Now, keep in mind that there are many other ways to get help paying for closing costs. These are just a few, but a couple other ways that are a way of thinking differently is you can get a gift from a family member. You can take a loan out against your 401k or pull money and pay taxes on it from your 401k. You can sell something. Just make sure you do a bill of sale. Everything has to be traceable. So if you'd like to learn more about any of the information and the closing costs or start the qualifying process, all you need to do is click on the link in the description and someone from our team will reach out and schedule a time to talk with you. This is 100% free and no payments required. We'll be there to guide you, answer questions, and point you in the right direction. I hope that this video gave you the insight that you're looking for and that you will join us for more information on next week's video. And if you know someone who could benefit from this information, please share this video with them and hit that subscribe and bell to get further notifications. Otherwise, just continue to check out all the other home buying and home owning tips on our channel and tune in next week.